How to get started with stock market? What are the different strategies and tips that are being used by the best investors? This is going to be a comprehensive guide to help you get started with the stock market. When people start investing, they have a lot of questions on how to get started, how much money is required, what all things they need to do, learn, and how to pick up the stocks. Which stock to start with. So for today's video, take a pen and a piece of paper and sit down and start making some notes as we go forward. This is going to be a valuable video for those who are going to get started on stock market. Hope I'll be able to provide some value in this video. I create such video only to help people so that they can have a better understanding of their financial and help them grow their wealth. Not sure why these things are not taught in schools. These are very basic necessities and everyone should know. So if in this video, if you are able to find any value, please click on like and subscribe to the channel and help us grow. So let's get started. The first topic which I'm going to cover is basically a prerequisite before you get started in stock market investing. That is financial audit. So before you get started, you should have a comprehensive analysis of your financial status. You need to find out what different kinds of loans you have, what is your income source, what are your expenditures. This is to make sure that you are not investing money and losing in the long run. Let me explain how it happens. You are getting started with stock market investing and you already have a credit card or any similar kind of high interest rate debt where you pay around 20, 30 or even 40% of interest. So if you get started in such conditions and keep on investing, it's not feasible because you need to be realistic with what gains you are going to make in the stock market. Usually if you do start as an investor, the gains are around 10 to 12% or sometimes till 15%. And if you keep on paying the interest at the rate of 20 to 30%, you are actually not making any positive gains. So the first thing you should do is get out of such loans, clear them up, and then start thinking about investing. There are some huge opportunities available in the stock market. Some people make huge returns by investing in by doing intraday trading or swing trading or investing in some penny stocks, but that's not for everyone. So the people who are getting started, the index fund are the basic thing that they should start picking up. Those usually give around 10% in the developed economies like US and around 12 to 15% in the developing economies like India. Now when you are done with your audit and you think you are free from all the high interest loans and you are ready to start investing, what is the first thing you should do? So basically I read about this in one of the first book which I read as part of starting my investing journey. So the book is The Richest Man in Babylon. In this book you can find out that the easiest way to start investing is first you need to keep some money aside for yourself. So the book states that you need to pay yourself first and then you should plan accordingly, and you should pay yourself at least 10% of the income that you are getting. That should be your bare minimum. Now you have already started putting some money aside and you are free from high interest loans, so you should think about investing in you should not only think about investing in index but also start picking up the stocks. So basically to pick up stocks, there are three fundamental strategies that we are going to discuss. The first strategy is fundamental analysis. This is the strategy which is being used by almost 80% of the people. Investors like Warren Buffett, Charlie Munger, they use the same strategy. Even if you go through YouTube, there are multiple influencers, including people like Akshat, who focus majorly on the fundamental analysis and the macroeconomic. So what exactly is fundamental analysis? The strategy is very simple. You find some good stock which all are undervalued and you invest the money for a long term, and those companies keep on growing. So what is the main thing that you need to focus on while doing fundamental analysis is how you are going to find whether the stock is undervalued at the point when you want to invest in that company. So in fundamental analysis, people basically study different metrics and statistics of that company. How you can learn the fundamental analysis? So you can take this as an homework and do yourself. So what you need to do is pick any company that you are aware is trading on the stock market. You need to Google it and find three different company statements. First one is the income statement, second is the balance sheet, and third is the cash flow of the company. You need to figure out how to read those different kind of statements. Once you are done with it, add the name of the company which you analyzed in the comment box and share what details you were able to understand. There are different metrics and ratios that every person who is doing the fundamental analysis should be aware of. To name a few, the first one is P ratio, that is price to earning ratio. The second is earnings per share. Third is the current ratio, then the quick ratio, and one of the important thing is the debt to equity ratio. So you need to understand all these different kinds of metrics and what those mean. I cannot cover everything in this video, but if you are eager to understand it before I create further videos on this, there is a very good book called Intelligent Investor. So this is the book which is almost like a Bible for investing. This has been written by Benjamin Graham, who is also the mentor of Warren Buffett. This is a great book which you should start. In the first chapter itself, they pointed out what is the difference between speculation and investing. So one of the basic things that you should understand while investing is you should not treat investing like gambling. You should not just go ahead and pick any stock and buy it at any rate. You should create your own thesis, your own way of investing, which uses math, statistics and logic to pick up the stock and to buy them. And you should always think about long term, to not even 2, 3 but 5, 10 and even more years down the line. At the start I said there are 3 different strategies and fundamental analysis is one of them. But if you understand that and fundamental analysis is being used by almost 80% of the people. But what about the other 2 strategies? The other 2 strategies are important, but if you use all those 3 together in conjunction, you'll be able to create even more wealth and increase your earning rate. So the second strategy which I'm going to speak about is called technical analysis. This is basically used by around 10 or around 20% of the people. So this is basically in the major focus of people who try to do swing trade or intraday trading. And in this strategy, what basically you do is you read charts and point out and use different ratios and strategies on top of the chart to predict what is going to be the future price of that. There is this one book which I read a long time back and I keep on revisiting that book. So the book is Technical Analysis for Dummies. This is one of the best books that is out there in the market, which can help you understand almost all different kinds of strategies that can be used for learning technical analysis, the bars, the charts, the different type of dojis and everything else. This is not for everyone. So this is one of the strategies which requires a lot of time and focus, and you cannot do it while doing your day job. So this is a type of strategy who are full-time invested in day trading and swing trading kind of thing. So but for people like us who have their own job and they don't have full-time available for when the market starts till the end, so they can basically skip this strategy. Even I don't prefer doing the day trading and intraday trading because you need to provide 100% of your time while doing the analysis, when to get in, when to get out of the stock. So what I basically use is fundamental analysis to identify which company I should invest in. I use some of the technical analysis just to identify whether it's the right time to invest or get into the stock. In the long run, if you think about it, it is not going to make much of the impact, but it gives some emotional satisfaction if you are able to identify the exact entry point. So suppose, take this scenario, you identified a company, for example say TCS, and you invested some bulk of money in the company, and as soon as you invested, the company went down by around 5, 10 or even 15%, which could be easily identified if you are able to do some technical analysis on it. So it's better to do some technical analysis and identify whether the trend, how the trend of the chart is going to say. Then you can invest it. It's not necessary, but it will give you some emotional satisfaction to do that. So the last strategy that I want to discuss in this video is behavior analysis. So this is not a primary strategy that you can use, but it is very useful when it's done along with the other 2 strategies. So the core of this strategy can be understood by just one single statement given by Warren Buffett. What he said was, you should be fearful when everyone else is greedy, and you should be greedy when everyone is fearful. So to understand it, what you need to do is when the market is trending on the fear mode and keep on selling and selling everything, so this is the right time to go shopping for the stock. So basically almost all stock will be on sale. This can only be understood if you are good in analyzing people and their behavior. So majority of the people are emotional. So they react very quickly based on the news. You can understand this by one example. So a couple of months back, so there was a whistleblower case for Asian Paint. It was quite aggressive in the news and people started panicking. They started selling the stock and the stock fell by around 15-20%. Nothing changed fundamentally for that company, right? So those people who have control on their emotion, they bought the stock in bulk and waited for a couple of weeks, and in couple of weeks the stock jumped back to its original high. There was around simple 15-20% gain that can be made very easily in a short time in a very good company. So this is the power of behavior analysis. Now let's get to the core of this video. So even if you understand all the different strategies, you are aware of how to do the fundamental analysis, even you have some control in your emotions and you know some chart patterns and you can predict the stock price for some extent. So everyone has this question, right? How to pick up a stock? From where they will be able to find the list of the companies that they should invest in. This is actually one of the simplest way to do it. In your everyday life, you come across multiple companies that you do. Either you are working in that company or you are using the services provided or the product provided by the company. For example, if you are working in any IT company or an IT engineer, you have a good understanding of how the project system works, whether it's TCS or Infosys or Wipro. You can get some public information about that company, how they are performing, which are clients they have and whatnot. Similarly, there are companies like Zomato. You can understand their business strategy. You can even see whether the company is growing or not. What are the future aspects that it can grow. The same thing goes for companies like Paytm, right? So if you try to just look around yourself, and you will be able to come up with a very exhaustive list of things that you actually understand it. Suppose you are part of any company, you will have some extra information about how the company is performing and how it's going to do. This will give you some upper edge against other people who do not have this kind of information. So there is one book which I will recommend for people who are not able to figure out which stock to pick. So the book was written by Peter Lynch and the book is called One Upon Wall Street. So Peter Lynch was a fund manager in 80s and 90s and he was really good in it. So if you are a beginner and you want to understand how you should pick up the stock, this is really good book to start with. So how do I go through and how do I pick stocks? So I have created an exhaustive list of stocks which I understand and which I am pretty interested in. It could be regarding any different sector that you have worked on or you are eager to learn about. It can be an EV sector, it can be an IT company, it can be a banking and finance. So it can be anything. So what you can do is create the list of those stocks. And once you get the understanding of the fundamental analysis, you can do the fundamental analysis on those companies. You can point out what rate of stock. So what you can do is you can identify at given point of time which different stocks are undervalued. So whatever condition of the market be, there will be some companies which will be undervalued at that given time. So suppose you have around 20 or 30 stocks in your list, there will be at least one or two which all will be undervalued. So what you need to do is you need to invest the money in those companies and wait for the time when other companies fall. So the market does not go like it's always on uptrend, right? So it will go up, come down, then again go up and create a new high. So you should wait for the time and keep on investing. The other thing is you can also go on a systematic investment type of plan where you can buy some stock at any given point of time. So basically you can have any of the two approaches and keep on investing for the long term. People who think that they are not ready for investment or do not have the money right now. So even for those, right, they should start learning and create their own knowledge and create their investor mindset. So when the time is ready, they can start investing. So this will basically keep you ready for the time. Hope you liked the video. Please click on like if you really learned something valuable in this video. Thank you for watching till the end. So in the upcoming video, I'll be covering how you can protect your portfolio from recession.